If you run a transport or logistics business in Australia, finance is built into your operating model in a way that is different from most other industries. Trucks, trailers, forklifts, and warehouse equipment are expensive capital assets that depreciate over time. Your clients, particularly commercial and government freight customers, pay on extended terms while your fuel, maintenance, driver wages, and insurance costs come due immediately. That combination of high capital requirements and delayed revenue is why transport and logistics businesses need access to well-structured finance at every stage of growth. Here is what is available, how it works, and what you can realistically borrow. Transport and logistics businesses have a well understood profile in the commercial lending market. Lenders who specialize in transport finance understand the asset values involved, the revenue profile of freight businesses, and the right way to structure facilities for a capital intensive, margin sensitive industry. The key is working with lenders who know this sector rather than those who treat a trucking business like a retail shop. Equipment finance is the primary structure for transport businesses purchasing prime movers, rigids, trailers, refrigerated units, forklifts, and other rolling stock. The asset itself is the security. This is how most commercial vehicle and transport equipment is financed in Australia. Rates are competitive, the structure is tax effective with depreciation potentially deductible, and keeping your property free preserves your borrowing capacity for working capital when you need it. For businesses adding to their fleet or replacing aging vehicles, equipment finance and chattel mortgages are the standard approach. Invoice finance is particularly relevant for transport businesses with commercial freight clients on extended payment terms. You advance up to 85% of outstanding invoice value immediately after delivery rather than waiting 30, 60, or 90 days for payment. The invoices are the effective security for businesses with strong clients but slow payment terms. Invoice finance can significantly improve day-to-day cash flow without requiring property as collateral. Unsecured business loans provide fast access to working capital for operational needs, covering a slow period, bridging between contracts, or investing in systems and technology. You can borrow between $10,000 and $500,000 based on your revenue and bank statements with approval in 24 to 48 hours. A business line of credit works well for transport businesses managing variable fuel costs, irregular maintenance bills, and the cash flow demands of a fleet operation. You draw what you need when unexpected costs arise and repay as client payments land. How much you can borrow depends on your revenue, fleet size, trading history, and the specific purpose of the finance. Well-established transport businesses with strong contracts and clean financials access competitive terms from transport specialist lenders. Most applications take under 20 minutes online. A commercial finance broker familiar with transport and logistics businesses can identify the right lenders. Brokers are paid by the lender on settlement. Use the free business loan finder at Reliable Business Tools to find which loan type suits your transport or logistics business. 6 questions, a clear recommendation, no credit check, and no obligation.